Welcome back. Now, before we take a look at the day's business news, let's first take a look at the stock indices across the GCC. And in our top business story, year-to-date volumes on the Dubai Gold and Commodities Exchange passed the 10 million volume mark for the first time in the exchange's history. According to news agency WAM, the milestone was reached on the 23rd of August this year, after 164 days of trading. Total 2013 volumes stood at 10.37 million contracts at the end of August, a rise of 80% from the previous year. Additionally, trading climbed 23% in August from last year to total 1,159,293 contracts, with a value of $34.08 billion US. Currencies, which were the mainstay of growth, rose 28% year on year to reach 1,124,507 contracts, while year-to-date volumes in the segment grew by 89%. Indian rupee futures continued their steady volumes expansion, increasing 16% from last year to aggregate 1,011,360 contracts in August. And year-to-date volumes in the product grew 72%. Gary Anderson, the CEO of the DGCX, stated that the sustained growth of emerging market contracts has been driven by the exchange's ability to offer participants some of the best tools in the region to manage currency and commodity price risk. And Dubai Aerospace Enterprise announced today that it is no longer in discussions with BBA Aviation plc about a potential combination of certain parts of its business. This comes as the company confirmed at the end of last month that the two parties were in preliminary discussions. Damac Properties has awarded a 1 billion dirham contract for the construction of Damac Towers by Paramount to the Dubai unit of Turkish firm TAV Construction. The contract is expected to run for 33 months, and Damac stated that it is the largest single contract it has ever awarded. According to a company statement, enabling work has been completed on site and it is ready for the main contractor to start construction work. There are a total of 4 towers which will be connected through a multi-level plaza. One tower will be the 540-room Paramount Hotel, while the remaining 3 will house around 1,000 residences under the Damac Maison and Paramount brands. The project is set for delivery by 2016. And continuing with the hotel sector, Sheffield Holdings has signed a joint venture that will see Dream Hotels operate its latest project, Marina 101, that is set to be one of the world's tallest hotels and hotel apartments. Marina 101 will be located in Dubai Marina and will house 300 guest rooms and 420 branded hotel apartments, which will be managed by Hampshire Hotels Management in association with the Wyndham Hotel Group, who are expansion partners for the Dream brand. The 5-star hotel is set to open in the 4th quarter of 2014 and will also feature 6 restaurants, lounges and a nightclub that will occupy the 101st floor. The hotel apartments will be made up of 1, 2 and 3 bedroom residences as well as duplex penthouses. This is the first multi-use hotel and hotel apartments tower for Sheffield Holdings, and it will also be the first hotel in the Middle East to be operated by the Dream Hotel brand.
Building Abu Ali created is itself a dream. 101-story tower, a very unique tower in the most promising area, Marina. I admire his vision, and when I looked at it, I said, Abu Ali, you had dreamed to have the best tower in the world. I have a dream brand, Dream Hotel, which will fit in very well over there. And that's true. This is not a simple project. I'm very proud to be associated with with Mr. Abu Ali, who has done an unbelievable job. This partnership as a dream brand, Marina 101, will be the most successful in Middle East.
The future plans of Marina 101 is to have the hotel operated as soon as possible, which will be in the fourth quarter of 2014, and look at having the best F&Bs outlets, from the international market in association with Dreams. I think it is most appropriate to bring the USA lifestyle hotel to Dubai. So looking at all their benefits and the elements of the lifestyle, we chose this operator as the dream, a dream which has just come through for us.
The UAE has climbed 2 spots higher and is now listed as the 5th country in A.T. Kearney's 2013 Global Retail Development Index. Retail accounts for a third of the UAE's GDP, and with a 5 to 6% growth, it is a significant element in the country's economy. Dubai in particular has plenty of shopping malls and stores to choose from, offering a wide selection of international products and brands. According to experts, all of these play a critical role in the continued progress of the retail industry in the country. More than 30 experts will discuss and share best practices that are key to retail's sustainable growth at the 3rd edition of the In Retail Summit. Farhan Mirza, a principal at A.T. Kearney Middle East, spoke about global trends and retail development.
What we see is that the UAE is continuing to grow, continuing to shine and going from strength to strength. And underlying that is the sustained macroeconomic environment, but also the ease of doing business, the retail environment, and also the consumers coming here with a high expectation. And that is a message in itself for retailers to avoid complacency. And at the same time, retailers need to be using things like analytics, using things like multi-channel, and using a better operational efficiency to improve their customer service. Customer service is where it matters most. The whole experience to the customer is what they need to focus on, because that's how they're going to differentiate themselves now. In a vastly more competitive market with more demanding customers, that's what's going to make the difference.
Some of the challenges that will be explored and discussed during the 2-day event include retail innovation, reaching the masses, putting the customer first, IT investment and profiting from customer insight. Neil Tunbridge, the sales director at Tajuri, an online shopping mall, says they are responding to the changes and demands of retailers as well as consumers.
Consumers have changed how retail needs to evolve. Consumers are now very much in control. They are placing different demands on the retailers, and it's about evolving brand and evolving sort of market demands. So retailers are having to respond to those new demands by developing new models and developing new revenue streams for their business. And what Tajuri aims to do is to help the retailers fast track into these new models. But what we're trying to do is de-risk the retailers. And what I mean by that is taking away a lot of the responsibility that retailers traditionally have in setting up e-com businesses, whether it's investment in IT, whether it's logistics, or whether it's call centres. A lot of the problems that retailers face within a heavily franchised market like the Middle East is that e-com becomes a non-profit making, non-viable business.